Good morning. It's Harvey Jackson. We're just going to go through a few news items here today. U.S. government shutdown averted, and producer profit futures focus. So Wall Street futures kick off with some strength here, and a lot of that's just because the aversion or the government stop has been kind of pushed aside. Now, I think there's $10 billion that it's going to be for farm aid. Some of the things that got left out that Trump wanted was the unlimited cap that failed after the second kind of a round. The and the E-15 got left out as well. And I think some of the disaster aid got left out as well. So some of the things that would have been beneficial to have were left out so that they can get passed and not have a government shutdown. And I'm not certain if this is newsworthy, but here Canada NDP commits to bring down the Trudeau government, but that's not going to happen until when the session gets called back in end of January. So it's kind of like we're going to be in limbo and in holidays and whatever else, unless the Governor General will call the government back early, which I don't think will happen. Palm rebounds on Dalian soy oil and some bargain buying. And I've said this before, when you get these dips in the market, it actually kind of improves buying activity if there's anything. And that's what we're definitely seeing. But we've got this thin holiday trade that actually makes things very difficult to get traded here as well. So just into the futures focus, here's your canola. So, but entered here and take profit at the top, exit and lose a little bit there, but we're already in a profit making position here. Of course, here's the lineup of vessels, and I think this is the reason why there's some uh, shifting from month to month. It's not CGC data yet; it's vessels, and you can see that there is quite a number of now the start of European kind of countries actually lining up and getting a fair bit of product. So that's where some of that demand is coming from. And if we look deeper in here, export data to China shows 2.044 metric tons that they've committed to since the crop year. But you got Belgium, UAE, France, Bangladesh have picked up on the exports. So you got a crush data at 4.44 million metric tons, and you've got a lot of product that's already left here. So there's always the bearish news that's already coming in here too. You're looking at the Chinese could put on some trade barrier, of course, but let's just be realistic. I don't know if they will, and if they do, where they're going to get the product is always the question, right? So these are some of the positions we put on, and it's a enter long position and exit at 660. And if the market were to fall apart, you exit at 565. And so far, both of those positions are adding up right now. Here's your red spring wheat, and it's a take profit right here and try to sell at the top. And right now we're only 2 cents up. That's all. Not a whole lot of different things going on. There's some dryness creeping into Argentina. We'll see if that actually plays out in the soybean and corn crop, if that's actually going to help. Here's your soybean play, and it is a short position at 9.95. So you're going to go betting that it's going down. Take profit at 9.05. So there's a little bit of profit to be taken if the market actually falls apart, which a big Brazilian crop will probably push us into that direction. Corn, it's actually a trade position is short as well at 450 and take profit at 430. Canadian dollar, it's actually a short as well at 7.706 and take profit at 0.6920. And that one's pending. So the market has to come up a little bit before it'll go down to that, I guess. Yep. Here's the markets as we see it so far. Canola is up pretty strong. Rapeseed is not as strong. Soybean oil is up, and you got palm oil up as well, pretty strong. And the wheats are all up a little wee bit as well. So anybody can certainly say what this market is going to do in this direction. It's thinner traded during the holidays here. So nice few days of recovery, and we'll see how far we can get here with some upside. But good news here anyway. So you see European rapeseed is actually not gaining as much as the canola right now, and you're seeing this happen here. Ideally, you want to see it closer to this $100 range. Rapeseed, it's kind of holding out, not going up anywhere. You can see it's made it a couple waves here, and holding out at the 68 retracement value. Here's your soybean oil. It looks like it's got maybe a minor kind of support at that value, and then you got a little lower again at the 38 cents. But we're currently trading 39.86 with a little bit of green candle there. Palm oil, nice recovery day, bounced off the 61.8 basically. We'll see if that can create another wave here. We'll see. It looks like it's picking up on demand. But then once it gets to the top, it loses demand. Crude oil, basically trading sideways in this wedge. Soybean has recovered a little bit, and I'm going to say this is probably meal. I'll show you right here. Meal has got a really long candle on Friday, and looks like it might be running up against this 23.6 here retracement value. So we'll see if we can get past there. Basically trade at $300 a short time. Canadian dollar still does not look like a good trend to be betting that it's going up yet. Spring wheat, just a nothing sandwich here, basically going sideways here. And same with Chicago wheat. Here's your milling wheat. Actually, it looks like you got higher highs here, or higher lows and higher highs in this little bit of a short-term trading range, which would be definitely beneficial. Corn, same kind of thing. You got higher lows getting made, but we're still needing to beat some of our previous highs here, which is way back here. So you got to beat that September, which it bounced back off of, and then it's up against this 200-day moving average as well. So we'll see if we can actually trade through that. And that's all I have for you today. Have a Merry Christmas. We'll chat with you after Boxing Day.